So Patrick, congratulations on the launch of the new RiverNorth DoubleLine Strategic Opportunity Fund, which was brought to market in September of this year. And also congratulations on your second closed-end fund offering in the last 9 months. I know that's a success for you, considering the IPO market and closed-end funds has been pretty challenging for the last few years.
At the end of the day, the closed-end fund structure is the best way for RiverNorth to manage our assets. We're opportunistic buyers of other closed-end funds, so having a fixed pool of capital without redemption risk is ideal for us to opportunistically invest in other closed-end funds.
Patrick, looking at the strategy, now this is not the first time that RiverNorth has collaborated with DoubleLine. The RiverNorth DoubleLine Strategic Income Fund has been around for almost 6 years now. Can you talk a little bit about the similarities and differences between the new offering and what led to bringing a strategy that's somewhat similar in a closed-end fund wrapper?
Obviously, the biggest difference is the fund we just brought out, ticker OPP, is a closed-end fund. So again, we don't have to have the redemption risk. Unlike the open-end fund, we have redemption risk on a daily basis. So therefore, we maintain a significant amount of liquidity in that fund. That comes in the terms of cash and also DoubleLine managing a third strategy, their core fixed income strategy, which is not in the closed-end fund structure that we just launched in the RiverNorth DoubleLine Strategic Opportunity Fund.
Patrick, turning to some of the key features and attributes of RiverNorth DoubleLine Strategic Opportunity Fund, or OPP, can you talk a little bit about what the fund is actually doing, what's RiverNorth managing, what's DoubleLine managing, and then some of the investment parameters?
Yeah, so the RiverNorth DoubleLine Strategic Opportunity Fund consists of two strategies. RiverNorth opportunistically investing in fixed income closed-end funds predominantly, and DoubleLine managing their opportunistic income strategy, which is more or less DoubleLine's hedge fund strategy, only available to accredited investors through their hedge fund or another listed closed-end fund, ticker DBL. That they're managing. Those two sleeves have a range of 10% to 35% on the RiverNorth side, and DoubleLine sleeve is a minimum of 65% to a maximum of 90%. So the way one investor could look at it is you're getting a core DoubleLine opportunistic income strategy with a satellite of RiverNorth opportunistically investing in fixed income closed-end funds. And those sleeves are dynamic depending on the opportunity set, predominantly driven by closed-end fund discounts.
So with that, Patrick, investors can think of this as turning the dial towards closed-end funds, as RiverNorth views the closed-end fund opportunity to be attractive, and then dial down, pushing capital to DoubleLine if the closed-end fund opportunity is less interesting.
Exactly. And you're getting the bottom-up selection by RiverNorth on the closed-end fund side, DoubleLine on the opportunistic income side, which is mortgage-backed securities predominant. And so you're getting that bottom-up selection, but then I think also most important, you're getting the tactical management of those two strategies depending on the opportunity sets.
Patrick, talking about attributes for a minute, clearly we're in a low interest rate environment, and people are looking for ideas and things related to yield in this environment. Can you talk a little about things like expected yield of the portfolio? I know it's certainly early in the process, duration, and some of the statistics that might be important to some of our viewers.
We just announced our first dividend, our monthly dividend, so it is a monthly pay. It's 11 cents per share, and that comes out to about a 6.6% annualized yield today. Now, truth be told, we are currently ramping up the portfolio. The fund just launched at the end of September. We've taken our time. There's been a lot of volatility in the market. Obviously, we've just gotten through an election as well. So given that we're both opportunistic investors, we wanted to take our time ramping up the portfolio. I think it's important to note RiverNorth and DoubleLine are more focused on total return than yield. So we're not going to let yield dictate the portfolio risk, and we're going to focus on the downside risk as well.
Patrick, you mentioned the election and a little bit about ramping up the portfolio. Can you talk a little bit about the current opportunity in the closed-end fund side of the equation and sort of how that's affected the way you and your team have put together the portfolio in the first 30 to 35 days?
Yeah, I mean, I think over the summer we saw discounts compress quite a bit, especially since the beginning of the year. Discounts were actually in the 98th percentile of widest discounts at the beginning of the year, and discounts contracted as there's kind of a risk-on mentality over the summer. And so when the fund launched at the end of September, obviously there's typically a fourth quarter tax loss selling period that goes on. So there's a seasonality effect in closed-end fund discounts, plus put on top of that an election that causes volatility. Both RiverNorth and DoubleLine wanted to take our time ramping up the portfolio. Current discounts, looking back, we were right. Since the fund launched, discounts widened out approximately 3%.
Wow.
And taxable fixed income closed-end funds are down approximately 4%. And that's post the election. So as of November 9th, 2016. So now we obviously find this is a better opportunity to start investing in the capital. As of 10/31, the fund was 54% invested, so we have plenty of dry powder to ramp up with the portfolio. Plus, we have a leverage component in the fund that we haven't tapped into yet, so we have that to deploy more capital into more volatility.
So Patrick, you've talked a little bit about what RiverNorth is doing in the portfolio. Can you turn your attention a little bit to the DoubleLine side of the portfolio, since that is the majority of the assets, and what are they investing in, and what can people sort of expect as a portfolio composition from the DoubleLine side of the equation?
Yeah, DoubleLine's managing their opportunistic income strategy. It's a strategy that the team's been managing for multiple decades, so it's nothing new to them. And like I said before, this is their hedge fund strategy, but not to be confused with traditional hedge funds where it's long short. DoubleLine's approach is more of a risk integration. And so the way they think about that is they tend to have a mortgage-backed securities portfolio in the agency arena and also the non-agency arena. So what that means is that typically non-agency mortgage-backed securities are trading at a discount to par. When you have a risk-on type of environment, the non-agency side of the portfolio typically does well. Vice versa, on a risk-off type of environment, the agency side of the portfolio typically does well, as there's a risk-off mentality and everybody's going to a flight to quality.
So in that respect, people can think of the DoubleLine component as mostly mortgage related and simply differences in the agency non-agency relationship depending on the economic backdrop. Is that a fair way to think about it?
Yeah, that's a fair way to look at it, and I would look at it, as far as a picture can go. You could look at it as a barbell approach, right? You got the risk-on side of the barbell, and you got the risk-off side of the barbell, and they're risk integrated. And so, that's a nice hedge to each other.
The DoubleLine opportunistic income sleeve is a nice component to what RiverNorth does, especially in times of discount widening. Is that fair?
Yeah, I think what you're getting is two alpha sleeves that are not necessarily correlated with each other.
Patrick, you mentioned leverage. Can you talk a little bit about just expectations around leverage at the fund level and at the closed-end fund level? Unlike the other RiverNorth closed-end fund that has more closed-end fund ownership, this is less. So does that imply more leverage to get to the kind of the yield you've been talking about?
So the way the leverage is structured in this fund is we're looking through to the closed-end fund leverage as well. So while we are going to have a bank line of credit to borrow to enhance the yield and enhance the total return of the portfolio, we're going to cap the leverage at 33 1/3% of managed assets. But that includes the fund leverage plus the closed-end fund leverage. So it's more conservative than the 1940 Act would allow.
Patrick, last question. For those that do know RIV, or RiverNorth Opportunities Fund, which is the closed-end fund launched back at the end of last year, that fund has some special features in the structure. There's some open-ending contingency features. There's some special distribution features. Can you talk about OPP and any similar features, or are those particular to RIV?
Yeah, so OPP also has an open-ending provision. So in year 5, I believe it's 2021, shareholders will automatically vote on whether the fund should convert to an open-end fund or stay as a closed-end fund. Obviously, the idea there is to protect the fund from trading at any significant discount. If it's at a significant discount in 5 years from now, shareholders, it would behoove them to vote positively towards a conversion to an open-end fund to unlock that value and narrow the discount. Obviously, mentioned earlier that the closed-end fund structure is the best way for us to execute on the strategy and manage the strategy, but it does give shareholders an option to vote on whether the fund should convert to an open-end fund and therefore not have discount risk.
Patrick, thanks as always for your time, and congratulations to the team on the new launch.
Thanks, Alan.